During Monday's Asian session, spot gold was directly ignited by the sudden geopolitical developments over the weekend. It opened with a gap up, surged all the way during the session, easily breaking through the $4,450 integer level with a maximum intraday gain of 2.8%, and then maintained a high-level oscillation around $4,442. This strong rebound this morning was fully supported by geopolitical safe haven sentiment. However, the risk of high-level volatility must be vigilant. Do not blindly chase highs. Looking back at the New Year's trend, gold has been like a roller coaster. On January 2nd, it closed at $4,328.70 in the New York late session, down 4.51% for the week. On New Year's Day, New York gold futures plummeted more than 1%, and domestic jewelry gold prices fell below 1,350 yuan a gram in response. Unexpectedly, a geopolitical incident broke out over the weekend, making market sentiment tense immediately, coupled with strong New Year's physical gold demand in the Asian market. It directly drove gold prices to open with a gap up this morning. Compared with the closing price on January 2nd, the intraday gain exceeded $110, quickly recovering part of the previous losses. The core driver behind this morning's strong gold rebound is the sudden geopolitical changes over the weekend. Gold has always been a traditional safe haven asset. Once geopolitical uncertainty arises, funds rush into the gold market to seek safe haven. More importantly, this incident involves major resource-rich countries, which may transmit to inflation expectations through energy prices at any time, forming a safe haven plus anti-inflation dual support for gold prices. In addition, the incident occurred during the weekend closing period, so market safe haven sentiment could not be released immediately, leading to a gap-up opening this morning and further amplifying the gain. In addition to geopolitical factors, two major supports are also simultaneously. First, strong New Year's physical gold demand in the Asian market has become an important short-term support for gold prices, providing additional impetus for upward movement. Second, the global central bank gold buying spree continues, bringing long-term bullish expectations. Institutions predict that the average monthly gold purchase volume of global central banks in 2026 is expected to remain at dozens of tons, providing a solid bottom for gold prices. However, it should be noted that there are still hidden worries about the short-term strength of the U.S. dollar index. U.S. core inflation has fallen back to the 2% policy target, and employment data has exceeded expectations, leading to a downward adjustment in market expectations for the number of Fed interest rate cuts. The appreciation of the U.S. dollar may indirectly suppress the upward space of gold prices. Short-term technical analysis. From the daily gold chart, a gap-up bullish candle was formed this morning, and the K-line pattern formed a bullish engulfing trend with the long upper shadow on January 2nd, indicating obvious bullish upward signals. In terms of technical indicators, the relative strength index RSI has risen rapidly from around 52 on January 2nd to the 68 range. Although it has not yet entered the overbought zone, the upward momentum has significantly strengthened, and the bullish momentum is quite strong. In terms of resistance levels, gold prices briefly pulled back after breaking through $450 this morning, and this range has become the first strong short-term resistance. If it can effectively stabilize above this level, it is expected to further test the previous high around $4,550. The support level focuses on the $4,400 integer level, corresponding to the lower edge of this morning's gap-up gap. Once this range is breached, it may fill the gap and test the $4,350 range, the intraday oscillation high on January 2nd. Everyone must closely monitor these two key levels. Reminds everyone that investors must rationally view short-term market conditions, closely monitor the success or failure of key levels, and dynamically adjust their operation strategies. Operationally, it is advisable to cautiously follow the bullish trend, avoid blind chasing of highs, strictly control positions, and do a good job in risk management. Do not lose your composure due to temporary ups and downs. All content above is for reference only and does not constitute any investment advice. Any trading operations conducted based on this information are at your own risk of profit or loss. Want to get real-time gold price trends, technical analysis, and major market news as soon as possible? Subscribe, like, and share with your investment friends around you now. Thanks for watching Tild. Wish everyone a smooth investment in 2026 and profits every day.